No, when Bitcoin is 13 million a coin, if you look at my base case, Bitcoin is like 20-30% of the equity market. And so it's just big enough that the volatility is decreasing. But my model in my mind and what we're thinking is if the money supply expands at 7%, the equity index will expand about 10%. The volatility of the S&P index will be about 10 to 12. The volatility of Bitcoin will be 20 to 22. It'll always be more volatile. The performance will be 20 to 22 ARR. It'll always be higher performance, always be more volatile, because it's an open, unregulated global market, because it doesn't have the counterparty risks, and it strips away the risk of a company, and it strips away the entropic degradation of physical property. It's always going to be better. It's always going to be more volatile. And I'm not concerned about it. That's why even when Bitcoin's 13 million, you'd be stupid to sell your Bitcoin and buy the other stuff. The other stuff's always going to be inferior.
Saylor begins by addressing the common concern of Bitcoin's price volatility, which often scares away traditional investors. He argues, however, that volatility is not a drawback but a feature that savvy investors should embrace. According to Saylor, the unpredictable swings in Bitcoin's value present opportunities for those who understand the asset's long-term potential. He likens this to Warren Buffett's investment philosophy, where lower prices are seen as opportunities to accumulate more of an asset, rather than a reason to panic. Drawing an analogy to Buffett, Saylor suggests that if the legendary investor were 40 years younger, he would likely be a Bitcoiner. He underscores the importance of viewing Bitcoin through a long-term lens, where temporary dips in price are merely chances to acquire more of the asset. This perspective flips the narrative on volatility, turning it from a risk into a strategic lever for future gains. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If Bitcoin is lower than it is right now in 4 years, you should count yourself lucky because you get to buy it. Okay? And by the way, that's not me. That's Warren Buffett speaking. Warren would say the same thing, right? Warren would be a Bitcoiner if he was just 40 years younger. Trust me. It's just, I'm probably not so open to the new, like, telepathic coin when I'm 99, or whatever. I might not be on stage talking about the new thing, but my point is Warren Buffett would say you shouldn't be sad when the price is lower. It's your opportunity to buy it. My second point, if you had a choice in this audience, and if I said, I know where Bitcoin's going, it's going to 13 million a coin, I'm willing to bet $15 billion on it, maybe 50 billion, maybe 100 billion on it. That's what I believe. Now, if I told you it's going to 13 million a coin tomorrow, how do you feel? What would you be thinking? Now, if I told you it'll go to 13 million a coin in 8 years, what are you thinking? Now, if I told you it's going to go to 13 million a coin in 21 years, what are you thinking? And let me tell you, what's the most valuable information in the world? It's not knowing what's going to happen tomorrow. In fact, if I told you it was going to go to 13 million in 21 years and it was going to go perfectly linearly with no volatility, is that better than if it goes to 13 million and it goes all over the place like this? And I'm going to give you my opinion. The worst thing is to know what happens tomorrow. If it goes to 13 million tomorrow, the only Bitcoin you're ever going to have is what you have in your pocket right now. And your thought is going to be, damn, I should have bought more. My second thought is, oh, all my family and friends, it's too late for them. They missed it. I feel really awful because I wanted to get them into it. The third thought is, wow, I don't have time to go refinance my house. The fourth thought is, well, how do I start a business and raise $1 billion to buy more Bitcoin? I'm not going to get that done by tomorrow morning. Fifth thought is, damn, I have all this money. It's not on the exchange. I can't wire it because banks are closed tonight. Okay, that's awful news. You don't want that. Okay? If I give you 8 years, okay, you have 8 years, but that's not enough time for everybody to get on board. If I give you 21 years and it's perfectly linear, that's awful too, because every stupid normie person that doesn't believe in Bitcoin, that doesn't understand what you understand, that has no conviction, they're going to get more Bitcoin than you because they're just this. Do you want the stupid, dumb money to buy all your Bitcoin before you buy it? No, you don't want it to be non-volatile. Here's what you want. You want it to be extremely volatile because that way you know something nobody else knows. I give you 21 years and you can go start a company, borrow money, raise capital, start a hedge fund, create a Bitcoin business, tell your friends, start a podcast, build a life for yourself, get leverage, mortgage your house, change the view of your bank. I'm giving you the ability to do work. It's a lever. It's a 21-year lever, okay? Like MicroStrategy's been working 4 years. If Bitcoin had gone from 10,000 to 65,000 on August 11th, on the day we announced our Bitcoin buy on August 10th, we wouldn't be worth 40 billion right now. We would be worth 4 billion right now. You see, so you want the lever, you want the time, and the second thing you want is you want massive volatility. Because, you know, like for example, when Bitcoin went from 66,000 to 16,000, everybody else, you know, had a crap, lost their minds, freaked out, and we doubled down, right? And it was a benefit for us. It was a problem for everybody else. We ripped up. And so you get the chance to prove yourself economically, and you get a chance to prove yourself intellectually, and you get a chance to prove yourself morally and ethically if you live through the volatility. You should pray for the volatility. When it goes away, you'll lose your advantage, and you should be happy that you know where everybody else on the planet's going to be in 21 years. You got a 21-year head start. That's a career. You can make a life out of that. And don't worry about the stuff that comes in the middle. It's a good thing. No, when Bitcoin is 13 million a coin, if you look at my base case, Bitcoin is like 20-30% of the equity market. And so it's just big enough that the volatility is decreasing. But my model in my mind and what we're thinking is, if the money supply expands at 7%, the equity index will expand about 10%. The volatility of the S&P index will be about 10 to 12. The volatility of Bitcoin will be 20 to 22. It'll always be more volatile. The performance will be 20 to 22 ARR. It'll always be higher performance, always be more volatile, because it's an open, unregulated global market, because it doesn't have the counterparty risks, and it strips away the risk of a company, and it strips away the entropic degradation of physical property. It's always going to be better. It's always going to be more volatile, and I'm not concerned about it. That's why even when Bitcoin's 13 million, you'd be stupid to sell your Bitcoin and buy the other stuff. The other stuff's always going to be inferior.
Another key point in Saylor's discussion is the concept of Bitcoin as a superior form of property. He argues that Bitcoin's volatility, while challenging, ultimately makes it a more desirable asset compared to traditional investments. Unlike physical assets, which suffer from entropy and degradation, Bitcoin remains pristine and immutable. Its decentralized nature strips away counterparty risks and other vulnerabilities inherent in traditional financial systems. Saylor also draws attention to the growing recognition of Bitcoin by institutions and governments. He references recent comments by former President Donald Trump, who acknowledged Bitcoin's importance and suggested that the United States might even establish a strategic reserve of the digital asset. This, according to Saylor, is a significant endorsement that elevates Bitcoin above other forms of property, signaling a shift in how global powers perceive the cryptocurrency.
If you listen to what Trump just said, he said, we're not going to sell our Bitcoin. You do not sell your Bitcoin. That recognizes that, you would never say this about most criminal proceeds that you seized, right? Actually, the truth is, if the United States seized a car, if they seized a drug shipment, if they seized a crate of foreign currency, if they seized pesos, if they seized euros, if they seized paintings or collectibles, if they seized your house, they would sell it, right? I mean, the normal thing is to auction off any kind of that property. So the fact that he would note that it's going to be the policy of the government not to sell it elevates Bitcoin as property that is economically superior to all the other property. So first we have an endorsement, an acknowledgement, Bitcoin is property. And if it is property, you have property rights to it. The second thing is it's better property than that other property, and I recognize it. The third is we're going to create a national United States Bitcoin strategic reserve. That's a big deal. That's a big deal because, we go from Bitcoin being something that's toxic that you want to get rid of to something that is virtuous that we want to hold on to. So I think that that's a profound thing that just happened. I think that Donald Trump's acknowledgement that the Bitcoin community is full of intelligent, ethical, hardworking, creative, inspired individuals, the kind of which that made America great. He pretty much said that the people that created this great country would have been Bitcoiners. He said the founding fathers are Bitcoiners. He said everybody that came to America is a Bitcoiner. And what he's acknowledging is whereas once the United States was the new world and it was risky and dangerous to come here for a better life and property, now Bitcoin is the new world. And it's risky and dangerous and people have suffered, like Ross Ulbricht, to come here for this property. And he recognizes that, he honors that, and he's willing to actually stand up and tell the entire world that will be an observation that ripples everywhere in the world, throughout the establishment and throughout other governments. And there's going to be a bunch of German politicians looking at that, saying, well, if the U.S. is not going to sell its Bitcoin, we must have been pretty stupid to sell our Bitcoin. And I think that's big move forward.
Saylor's discussion also touches on the broader implications of Bitcoin's adoption by governments. He predicts that as the US government and others begin to hold Bitcoin as a strategic asset, it will have ripple effects across the globe. Countries that have previously sold their Bitcoin holdings might reconsider their stance, realizing the long-term value they have forfeited. He also highlights the cultural shift that Bitcoin represents, likening the early adopters of Bitcoin to the pioneers who founded the United States. Just as America was once the new world, full of risk and opportunity, Bitcoin is now the new frontier for those seeking financial freedom and security. Saylor believes that this recognition by influential figures like Trump marks a turning point in Bitcoin's journey, further solidifying its place as a cornerstone of future financial systems. please like and subscribe my channel.